Okay, all right, guys, you are welcome back again to our Forex tutorial, right? Today I will be teaching you how to predict the move of the market for a particular day, right? Or for a particular week, right? Or for a particular month, right? So this particular method the credit actually goes to ICT, the Michael of ICT, right? I actually did not learn this directly from him. I actually learned it from a channel on a Telegram, and since that, I have been actually backtesting this, and I've actually been using this in my methodology, right? In my system of trading, I've actually bring this in, right? So it's actually not a word I've actually derived for myself. It's actually what we call AMD, weekly AMD, or we call that weekly range or a daily range, right? It can also go on to a monthly range, depending on which zone you're actually looking to trade, right? And this particular system will actually make you to predict a move before it happens. It will make you to anticipate what you are actually expecting for a week. It's actually very, very interesting that if you can actually bring it in into your method, it's actually going to straighten you so much more. Probably after the end of this section, I will look for another time to actually teach you a simple way to actually catch. If you are trading M15, a simple way to trade to catch probably 30 pips or 50 pips each day, and for weekly also to catch about 50 to 100 pips each week, right, on a singular pair, right. So, and this is actually basically on what I actually want to show you today, which is actually called AMD, right, or the power of three, right. How does the power of three actually works, right? Just like I said, I actually said it earlier. This actually works, right, for a daily trading range. We have the weekly daily range, right? We have the monthly daily range, right? Monthly daily, we have the yearly daily range. So it depending on actually how you're actually looking at it, daily, weekly, monthly. At the same time, we can actually have quarterly, right? We can have quarterly uh, trading range. How you're actually looking at those things and how um, you are anticipating the reversal. Okay, so that said, a typical candle of actually what we're looking at actually is like this, right? I actually want you to pay attention to this. If the market actually want to be bullish, right? If the market actually is about to go bullish for a day, right? I'm actually going to use a green line to actually explain that. When the market open, we're actually going to consolidate a bit, right? It's actually going to consolidate. That's actually for a day. And the best view for this day is actually on a M15 time frame. You can use M15 to actually catch this particular move, right? The market is actually going to manipulate to the downside. Then after this manipulation, and actually we take out liquidity, for you to know its liquidity zones, you can refer back to our video on how on liquidity zones, how to spot liquidity. Then after manipulating to the downside, the market will go up for the day, which is actually what we call the distribution phase. Then the market will actually come back again for the rest of the day to consolidate, right? And look at this structure that you've just seen, right? This is actually the pattern that you're actually looking for to trade, right? If a typical day, in a typical day, if the market is actually going to be bullish, right, the market will open. Then after the market opening, where you are going to see some manipulation, all right, to the downside, taking out liquidity, then the market's actually going to distribute for the rest of the day. Then towards the end of New Year section, the market will retrace back again to consolidate. And this is also applicable for the weekly structure, the monthly structure, the yearly structure, and the quarterly, right? So how do we explain this weekly structure? The beginning of the week, which is actually Monday, Tuesday, right? Particularly Monday, the market will consolidate, then the market will actually trade back to manipulate, taking out liquidities between this Monday, Tuesday, and Wednesday. But most time, it always happen on a Wednesday. Then the midweek reversal that we're actually expecting on Wednesday will be the distribution, which is actually the main trend for the week. Right. So for Monday and Tuesday, the market will be creating this structure like this. Then from Tuesday, Wednesday, or Wednesday, Thursday, the market is actually going to distribute. Then on Thursday, Friday, the market will come back again to reconsolidate. And the same thing is actually applicable to the monthly. In the monthly, when the market actually open for the first 1 week, right, or the first 2 or 3 days or 4 days, the market will actually be consolidating. Then the following week, the market will manipulate. Then for the rest of the week, the market will distribute. So these are the way that you can actually predict a move before it happens. So when you understand this pattern, you can actually backtest this and search this. You're actually going to see these are you're going to see this, and you're going to know that this actually happen almost all the time, right? Almost all the time. You can easily find this particular setup almost all the time. So your own is now to bring it into your methodology and for you to know how to trade this particular pattern before it happens. So very quickly, I'll be showing you the daily and the weekly for this particular tutorial. I'll be showing you the daily and the weekly for this particular tutorial and how you can actually trade them. It's actually going to be explained in our next tutorial. Okay, very quickly, let's go back to the chart and let me show you how this will occur. Now, without having any any date in mind, I would actually like to start probably from the beginning of January for this year, right? January, right? For this year, I will um, let's just start from January 3rd. Now, this black line that you are seeing on my chart, I just have to use this. I don't normally use any indicator on my chart. All right, I just use this for the tutorial just to show you what is really happening. Now you can see when the market open, look at the consolidation. Can you see the consolidation? This was the opening price. This line actually represents the opening price. Look at the consolidation, right? The market was consolidating around the opening price. Then the market came back and taken out the low of this particular structure here. Then the market actually went up for the day. So as you can see, consolidation, manipulation, distribution, right? Consolidation, manipulation, distribution. Can you see that? So the following day, right, you're actually going to know the market open. This line is actually the market opening. Then we have consolidation, right? So the market go up and actually manipulate, taking out all this liquidity. Then we have distribution, right? The following day, the market consolidates again, manipulation, right? Distribution, right? So the following week again, right? We have manipulation. This was the week open. The market went up. The market distributes, right? Can you see that? So for the rest of this week, this is actually what we're having. The market open, manipulation, distribution, right? So this is actually the market opening. You can see this manipulation and distribution. Actually, if you go to the daily chart, this is actually what you're actually going to be seeing. All right, let's go to the daily chart and use our bar chart. Actually going to use the bar chart and actually going to see what I'm talking about. Right. So let's see. Now, this day actually want to be bearish. You can see when the market opened, the market manipulates to the upside and the market distributes for the rest of the week. The market came back to consolidate again. The market opened, right? Consolidate, manipulation, distribution, consolidation. The market opened, consolidating. After consolidation, we have manipulation, then distribution, the market consolidates again. So you can see this repeating itself every day. If you search through your chart, you see that this pattern happens all the time, every day. You can actually see this pattern happening all the time. Now, each candle actually represents a day, and just like what we've actually viewed on M15, right? This is actually a day representing this is actually representing a day, right? M50 is actually representing a day. As you can see, the market open after consolidation, the market manipulates, taking out this low, then distributes. Can you see that, right? This actually, the market just continues to go up, even though the market actually came here and actually manipulates them before going high, but this is actually not a clear manipulation. This will not happen all the time, but for you to, this will actually happen all the time, but for you to spot it, you might not be able to spot it all the time. And that's the reason why you just need to train yourself to catch all these movements. Can you see that? So this happens all the time. Look at the consolidation. We have manipulation to the downside, then distribute. Can you see that? consolidation, manipulation, right? The manipulation to the upside, then distributes, right? Now, the direction that you're actually going to go for a day, right, will be determined by your bias or your setup. So you'll not just be trading. As you can see, this is actually going to show you as if it's actually manipulating, not knowing that the manipulation is actually to the upside. So in a bearish market structure, right, in a bearish market structure or in a bearish market institutional order flow, what you are looking at for is when the market opens, you actually want to see manipulation to the upside before you look to trade it down. So this is actually the best way to predict the move before it happens. You know, when you can actually catch the eye of the day, yeah, and actually trading it down, you know how much profit you would have made, right? From this area to this area, that's about 100 pips, right? Let's see another one. The market opened, the market was just dropping here. Look at this one. The market opened, manipulate to the upside. You'll see how many pips you would have actually made for the day. Can you see that? So look at this also. Market open, consolidation, the manipulation, taking out this low. Then you see how many pips you would have actually made for the day. So this is actually a very powerful thing for you to catch the moves before it happens. You'll be able to predict it before it happens. And this is also applicable to the weekly time frame. For the weekly structure, how to know the direction of the market in a particular week. And that is why in my analysis and my setup, you would have actually heard me say that, okay, we are expecting manipulation before we can actually see the direction of the market. And this is actually very easier to see. When the market open, this particular range is actually a week, right? And as you can see, this black line also represents daily open. But the one of our interest is actually going to be for Monday, right? Because actually a weekly structure. So we'll be interested in the Mondays alone. Now, let's see for this week. Look at this week open. This is actually the Monday open. This week open. The week we have consolidation on Monday. On Tuesday, Wednesday, the market manipulates. Then we can see for the rest of the week, we have boom. Right. Look at this day, particularly the market was just dropping. But look at this particular one. When the market open here, then we have manipulation to the downside. Then look at the rest of the week. The market open here, manipulation to the upside. Look at the direction for the week. The market open here, right? The actually market actually went up. Take out this liquidity. Look at direction for the week. Now, this happen all the time. Look at this, right? Look at the manipulation to the upside. Look at direction for the week. So this will actually help you to catch the move before it happens. So you'll be able to know the direction of the market when the market open in a particular week, right? Monday and Tuesday, look at the direction that the market is going, right? If during Monday and Tuesday, the market is actually going up, know that for that particular week, the market is actually going to sell down. Just like what I said, this is not absolute. There might be some time whereby the market will begin to go up on Monday and Tuesday. Then for the rest of the week, the market will continue to go up, right? So you can find this instance here, right? Look at the market was going down, right? At the beginning of the week, and you can see for the rest of the week, the market went down. But this is just in a rare situation. But based on the market structure, the market will open Monday, Tuesday. We're actually going to form the low of the week. Then the following day, Wednesday, Thursday will be the distribution. Then Friday is actually going to be the consolidation again. So I hope you've actually found value for this. So you can backtest this and actually see how the market works and how to predict the moves in a particular day, in a particular month, in a particular year, and in a particular week. Then you will be able to ride the trend as you want. All right, guys, thank you very much. And I will see you in the next tutorial whereby I will be sharing some interesting strengthening or concept in the FX market for you again. Thank you. God bless you.